Jai Hind Traders, welcome to Market Learners YouTube channel. So in this video, we are going to learn how you can create a momentum based buying or selling strategy in AlgoTest and then backtest it. I will also show you the strategy I have created and that is giving some good result in past. So before that, I must suggest you that I have created a tutorial series on AlgoTest, that how you can create a modified Strangle or modified Straddle. These are the basic tutorials you must watch before this video, before this momentum based video. So I must recommend you to watch that. I will give the link in description. You can also find that on my YouTube channel with the name of AlgoTest Part 1 and AlgoTest Part 2. This is the Part 3. So now we will discuss what is backtesting and what is momentum based strategy. So assume you have a strategy. Okay, now before deploying it in live, you want to test that strategy in past, that if in last few years it has performed well, it is profitable or not. So if it is profitable, you gain the confidence, you get the confidence that if the strategy is profitable in past, it will also be good profitable in future also. There is no guarantee that this is profitable in future, but if a strategy is profitable in past, then we must assume that it might perform well in future also. So this is back testing that you can do with AlgoTest, and it is absolutely free. You don't have to pay anything. They provide you 25 free back test every week. You just have to open your account using the refer link in description, and you get 25 free back test every week. Also, when you purchase anything here, you get 25% extra on that. So refer link in description, you can use that and create your account. Now second thing, what is momentum based strategy? So momentum based strategy means, for example, let me open the charts of Nifty. So this is a trading view. I am checking the chart. So trading view is just a simple tool where you can check the candlestick charts and all. So this is simply a charting tool where you can add indicators and all, and this is not required for backtesting. I am just showing this to so that it will be easy to understand. So assume at morning 9:20, you can see the 919 candle, 9:20, the price was 21683. Okay, so now what I want is, I want to backtest a strategy that if in morning 9:20 market moves 10 point above, then I want to buy a call. If market moves 20 point above, I want to buy a call. So this is how this is called a momentum based strategy, where you can check if a certain if at a certain point of time the market moves up or market moves down, and you take a trade, then how it performed in past, and you give some stop loss or target or something that you can give. But main core is we are checking with momentum, that if market moves this point up, this point down from a specific point, and you want to take a trade on base of that, is that strategy performed good in backtest or not. So if it is profitable in backtest, if we are trade with momentum, then we can also apply that on live also. Okay, so this is how the momentum feature works. Now we will discuss in detail how you can create a strategy based on momentum in AlgoTest. We will also discuss that if we take re-entries and all these things and all stop loss target, then how we can create a profitable strategy based on momentum based strategy. So traders, now let's open our AlgoTest dashboard, and then we will create a strategy. So to open AlgoTest dashboard, click on Go to Dashboard. Here to create a strategy and backtest it, you can click on Create Strategy. Now I have explained some of the basic features of this dashboard in our previous videos, that is AlgoTest tutorial part 1 and part 2. So if you haven't watched that videos, you must watch that so that you can get a basic idea how these each feature or some features, some basic features on this dashboard works. So now in instrument settings, here you can select the instrument. For example, if you want to backtest your strategy on Nifty, Bank Nifty, or which chart or which index, so I will select Nifty here. Underlying form means there are two charts, cash charts and future charts. So if from which chart we want to select our prices, or from which from which chart we want to select our at the money strike or OTM strike, so we will select cash here. Now next option we have here is anti settings. So here you have three options if you want to backtest intraday strategy, BTST, or positional. We are going to backtest intraday strategy, so we will select intraday here. Now, anti-timing. Anti-timing is the time at which you are taking an entry. But as we are doing a momentum strategy, so if we enter 920 here, it means it will select the price at 920 and then wait for momentum. The momentum we describe in our strategy that we describe in next letter. But you just understand the basic. What is anti-timing? Anti-timing is, for example, I have shown you Nifty that this is the 920 timing here, and 920 the price was 21,683. So if we select 920, it means it will select the price 21,683. The price at morning 920. Assume we select 922 means this 921 candle it closed at 922. Assume it closed here, the price was 21,751. So it will select the price 21,751 if we select 922. So this is the meaning of anti-timing here. We will discuss more in detail about anti-timing. So we have selected 920 here. Anti-timing is the time at which you want to exit your strategy. If there are some position in your strategy, you will exit same day on this time. 315, we will select 320 here. Now this is lag builder. So what is lag builder? Lag builder is used to create a lag. So what is a lag? So assume at morning 920 you want to buy or sell at the money call. At the money call. So this the at the money call strike that you want to buy or sell with one lot or two lot. This is called a lag. So this we can create using lag builder. For example, what we want to do is we want to select our we want to trade in futures or options. That is the option here. So if you want to create a strategy based on futures, that you want to trade in futures, you can select futures. We want to do options, so we will select options here. Now total load. Total load means in which quantity we want to backtest our strategy. We will select one here. We want to create a buy strategy or sell strategy, means option selling strategy or option buying strategy. So we will select sell here. Currently we are creating a selling strategy. Now option type, we want to select a call strike or put strike. So that is the option here. We will select first call here, then we will select put here. Now expiry, which expiry you want to select, current weekly expiry, next weekly expiry or monthly expiry, means which expiry you want to backtest your strategy. We want to select weekly expiry. Here is the option to select strike. We will select closest premium here, because in strike type you can select at the money strike, OTM strike or whatever strike. So it will select the strike at morning 920, but we will select closest premium and 100 premium. It means it will select a strike whose premium is 100 rupees, whose value is 100 rupees at morning 920. That is our anti-timing. That we will add lag. So this is added. Similarly, we will add a put lag also. That we will click on add lag. So now it will select at morning 920. At morning 920, it will select a strike whose premium is 100 rupees. So let's discuss this in Google Sheets. So our anti-timing is morning 920. Assume at morning 920 there is a strike 21,900 call whose price was 100 rupees. So it will select a strike 21,900 call. Similarly, there is a strike 21,800 put whose premium was 100. So it will select that strike. So at 920 it will select these two strikes. Okay, so now these value, sorry, these wait let me move it here. Yeah, these strike have value of 100 rupees at morning 920. Okay, now to create a momentum strategy, first we will enable the simple momentum here. Simple momentum. And now in simple momentum we will select 10 here. 10 means 10 points. So here we select upside arrow. You can see there are multiple options here. First we will discuss about each feature in detail. So assume we selected upside arrow here. Here we also selected upside arrow here. Upside arrow means that if market moves 10 point above. 10 point above means let's open this. That at morning 920, as I have explained, it selected a strike whose premium was 100, 21,900 CE and 21,800 PE. Now if market moves 10 point above, so from 100, 10 point above means at 110. So if market moves to 110 at any point of time, it is possible that after 920 it moves to 110 at 940 or at 950. So whenever the market touches the 110, it will take entry. In which it will take entry, that we have defined here, that it will sell the call. We can also buy the call or buy the put, but currently we have selected sell the call to explain you how this thing works. That it will sell the call, and if the put strike moved 10 point above, means if put strike moves from 100 to 110, then it will take the entry in put strike 21,800 put strike. So this is how the momentum feature works, that here we can define a momentum, that for example if I define here 30 point. Okay, now the how the 30 point momentum works, it means that at morning 9:20 the premium was 100 rupees. Now from 100 rupees it will select 30 point above, that is 130. So if market touches 130 from 100 to 30 point above, means at 130 at any point of time in that day, means we are doing intraday, so it will select on that day also. So at any point of time it touches the 130 mark, it will take the entry. So this is how the upside momentum works. Similarly, assume we select downside momentum. Downside momentum means it will take only, and it will take entry only when the price move was downside. How much downside? The 30 point that we describe here. For example, I will enter 10 here, 10 here. You can see the downside arrow here, it means downside momentum. So if the market moves downside 10 points, downside 10 points means from 100 to at 90 price. So I will select 90 here and I will enter 10 and 90 here. So if our the strike selected that was 21,900 C, if that moves to 90, then it will take entry. If that price don't come, it will not take entry. Similarly for 21,800 put, that if it moves to 90 from 100 or from any price that at that day, if it moves to 90, it will take entry. If it don't move to 90 or don't touch that 90 price, then it will not take entry. So this is how the momentum feature in points work. Now, if we select percentage here, how the percentage feature works? Percentage feature simply select according to percentage. Assume I select 20 here and 20 here. It means 20%. So it has selected 100 rupees premium at 920, and 20 percentage of 100 premium is, let us calculate here, that 20 percentage. That 20 percentage of 100 premium is, wait, 20 points. Let me enter 20 here. Here also I will enter 20. So if market moves 20%, means from 100 to 120, it will take entry. Same for put side 20%. Assume if the premium we selected was 200. We have selected premium 100 in our strategy. If we selected 200, that means 20% of 200 is 40 points. So it will take entry if market moves 40 point. So 40 point from where? 40 points from our the premium price that selected at 920. So 920 premium selected 200. So if market moves at 240, then it will take entry. So this is how the momentum feature works. And downside also, that if market moves 20% is downside, then it will take entry. Now it can happen that, assume that let me explain it with a simple example, that we have selected 200, 20% is downside. 20% is downside means 40 point, 40 point. Now 40 point downside means 160. 160. Now it will mark the price 160. Whenever the market comes to 160, it will take entry. So if market moves from 200 to 230, 40, and then come back to 160, still then also it will take entry. It doesn't mean that it will keep on moving according to the time or according to the price. It will take the price at 920, the entry timing you select, and from there it will calculate the momentum, and it will keep on waiting till the price comes. Whenever the price comes, it will take the entry. So this is how the momentum feature works. Now we have understood how points and percentage work. These are the momentum on options type, options contract chart. But what if we want to check the momentum on index chart, that if index moves, that index means the nifty main index spot chart or future chart, if that index moves 10 point above, if the index moves 20 point above, then take entry. So then we can do that by using underlying feature. Underlying means the index. Now what we want to do is, let me select buy here, also buy here. If the market moves, if the index moves 20 point above, 20 point above from 920, then buy the call. And if the index moves, wait, let me select 20 point here, that if the index moves 20 point downside, then buy the put. So now how this is going to work? So it will select at morning 9:20, it will select the price of index. So let's select the price of index at morning 9:20. So here, check it here. This is the 919 candle. 919 candle means it closes here at 9:20. At 9:20, the price was 21,682. Now the momentum we have selected here is 20 point upside and 20 point downside. So it will, let's mark the 20 point upside. 21 upside means 21702. Okay, let's copy it and let's enter here 21662. How I mark the 21662? Because if from it selected price at 920, at 920 price was 21,682. Now 20 point above is 21,702. So if market moves 21,702, it will take entry in call. And which strike it will take the entry? That it has selected at 920, whose premium was 100 at that time. So that was 21,900 call. And assume if market moved downside, it happens that from here it goes up and then came downside. So if market touches downside, for example here it touched downside, so it moved to 21,662. So it means 20 point momentum on downside. The price it selected for reference was at 920, and from this price 21,682, 20 point down was 21,662. Now after some time from here the market moved here, means 20 point downside momentum, so it will take entry in put buy. So put buy, from here it will select the buy put position. So this is how the underlying points feature work, the upside momentum or downside momentum that you can select here. That if you select downside, then it means the downside momentum, and if you select the upside, it means upside momentum. Similarly, you can select according to percentage also, that if you select 1% here and 1% here, 1% means it will select 1% of the price at morning 920. Assume here the price was 21,681, so it will select 1% of this, that is around 216.82. It will mark the price somewhere above here. So if the market moves to 16 point above, then it will take entry. If the market moves to 16.82 below, then it will take entry. So this is how the underlying percentage feature works, that it simply calculate points in percentage of where the price we selected at 920. We can select 930 here, then it will select the price of 930. Why I selected 920 here is because in morning there are high chance of momentum in morning time. Also the ending time, the market end last 1 to 2 hours, that also there is momentum, so you can select that time also. So if there is momentum, you can backtest that strategy. Now we have selected, we have understood all the features, how underlying and points feature works. Now let's create our strategy, that if market moves 10 point downside and also here 10 points downside, then we will we will sell a call and sell a put. Okay, this is our strategy that I have created. Now I want to put a stop loss also, that when it sold, that there should be a stop loss of around 20 points. Let's discuss, let us do 20 point or 20 percentage. So it will select 20 percentage here. So we will select 20 percentage here. Also our stop loss is 20% here. So how this is going to work is it selected 100 rupees premium, that is at 920 100 rupees premium. The what is our momentum? 10 points down. So if market move 10 points down means at 920 our option strike, that is 21 900 C and 21 800 PE. It can be any at morning 920. We have just took this for example. So it will take entry. What is our stop loss? 20%. 20% means 80 point is our stop loss. If market moved 80 point against our position, we will exit that. Now we will also select target here. Our target is 35 point. I have explained the stop loss and target profit in our old videos, the part 1 and part 2 videos. You must watch that. These are simple that if we got to a 35 point profit, we will exit that. So this is how the percentage and stop loss work. Now we will also understood the re-entry part. Now I have explained the re-entry, ASAP reverse and recoast reverse in our previous video, that is part second. I will discuss re-momentum today. So if we select re-momentum, how it works. Now assume that we at 920 it select a 100 rupees premium. Okay, it selected a 100 rupees premium whose strike was 21 900 call and put. Okay, 21 800 put, and it we have momentum is the momentum we have is 10 points down. So at 10 point down means 90 point. At 90 point, when the market moves to 90, it sold the call. If put side moves to 90, it sold the put. Okay, and what is our stop loss? 18 point means our stop loss was at 108. Okay, now what happens is if our stop loss hit, we want to take a re-entry. But when we want to take re-entry is when same momentum happens again. For example, it 920 it selected 100 rupees premium and our entry that is 9 that is at 90, it happened at assume 0945. 0945 the market reached 90 at 90, so it took the entry in call side. Now we have 18 point stop loss, that is 108. Now it hit, our stop loss was hit at 1020. Market reached 108 and our stop loss was hit. Now how the re-entry momentum feature, the re-entry momentum feature here we selected works is that at 1020 at our SL was hit. Again at 1020 it will select a strike whose premium was 100. For example, the our it selected a strike for example 22,000. Okay, whose premium was 100 rupees. When it was 100 rupees at 1020, when our stop loss was it, now it will wait that the 22,000 call moves 10 point down. Why 10 point down? Because our momentum is 10 points and we have re-entry on momentum, so it will wait for the momentum. If the market if the strike moves to 90, that is 10 point momentum, it will sell that again. So basically what we are doing is we are re-entering on our stop loss hit. If our stop loss was hit, it will again select the strike whose premium is 100 and wait for momentum, and if the momentum condition comes true, then it will take the entry. So this is how the momentum the re-momentum feature works. So same is the case of 21 800 put. 108 was SL and assume it was hit at 1040. Our stop loss was hit. Again, it will select the strike at 1040 whose premium was 100. Assume the strike we got was 21 8 21 700 was the strike at that time whose premium was 100. Now it will wait for the 21 700 strike to move back to 90. So if the market reaches to 90, that is 10 point downside, it will again take re-entry. So our re-entry happens and same the stop loss and target will be placed and it will wait for that. And this is how we can use the re-entry feature. If we enter 2 here, it means it can re-entry 2 times, means one time SL it wait for momentum and take entry, then again again if our stop loss it again it take the entry. So we can enter max 20 re-entries here. We will select one only. Now now we will discuss the second feature, that is re-momentum reverse. So now how the re-momentum reverse works. It will work the same, but only thing is it will reverse the position. How it reverse the position? For example, assume that at 10:20 our stop loss was hit of 21,900 call side. So it will select the 22,000 call at that time whose premium was 100, and if the momentum it happens from 100 to 90, it will buy the call. Why buy the call? Because our initial position was sell the call, but what remomentum reverse is doing is it is reversing our position. It will work same like remomentum re-entry, that it will take re-entry only if the momentum happens, but it will reverse the position from sell the call to buy the call. So this is how the remomentum reverse feature works. I hope you understood it well. So still if you have any doubt, you can WhatsApp me. I will give the WhatsApp number in description. Also you can ask in comment box of this video. So let us backtest this strategy if it works well or not. So I am selecting a time period of 2023 to 2024. Let's backtest this. So here are our results. Let us check if we have done it correctly. Yes. So here you can see the how much we have generated in last year. In backtest, it gave 57,000 returns with the 11,000 drawdown. So we can also check out with the if we do this strategy only on Monday, how much profit. You can see on Monday the profit was not much. So if we select on Tuesday how much profit? Tuesday was the loss, so we will select Wednesday, Thursday, and Friday. So you can see on Wednesday, Thursday, Friday, if we do, we are getting some good result. Okay. Now we can also add some slippage as we are doing selling. So we should add some slippage. Still the results are, you can see these are good, and these are the statistic. You can see the how our overall profit, average loss, and all these things, and the expectancy is also good. So this is how you can create your strategy and backtest it, and you can modify these things. Some things, for example, you can try with entry time 9:30 or 9:40. This is a different things you can try and backtest your strategy. You can also modify the momentum, also add trailing stop loss. This I have explained in our previous video. So hope so you like the video, and if you like the video, please share and subscribe this channel. Thanks for watching, guys.